So if we fast forward 4 years, where are we going to be?
Right.
I would say it's highly likely that we are approaching one order of magnitude movement. So based
About
on what I
10x.
said before, so about 10x, which would put us in the $600,000 to $700,000 per Bitcoin range.
Welcome to the Next Level Income Show, where it's our goal to take your income, your investments, and your life to the next level. I'm your host, Chris Larson. If you haven't yet, get a copy of our book for free at our website, nextlevelincome.com. That's www.nextlevelincome.com. Just click on the book link, and I'll even send you a copy if you put your address in. On today's 200th episode, we welcome back Bob Burnett. Bob is the founder and CEO of Barefoot Mining, a company focused on the development of horse-class mining sites, and he is a vocal proponent for the expansion of diversity in Bitcoin mining site geography, scale, and energy sources. Bob has spent over 35 years as a technologist, including 13 years at Gateway, a Fortune 200 personal computer company. You guys may remember the Gateway cows, where he led the company's product development efforts as chief technical officer. Bob also founded and manages the Barefoot Bitcoin Fund. He serves on the board of directors for Ocean, a company focused on transparency and decentralization of Bitcoin mining pools, and is on the board of advisors for the Satoshi Action Fund. He has founded several companies in the Bitcoin mining space and is an evangelist and educator for Bitcoin, and it's important to the world's future. He has 8 U.S. patents, a degree in computer engineering from the University of Wisconsin at Milwaukee, and today he's going to share his knowledge on what is the Bitcoin halving, what he predicts the price to be in the future, and how Bitcoin is going to become integrated into the currency of the world. Bob, welcome back to the show.
Hi, Chris. Great to see you, man.
Oh, great to see you too. You join the elite ranks of only a few guests who have been on the show 3 times. And I know I gave a short intro here before we started, but if you'd like to hear Bob, he was on episodes 83 as well as 89, talking a little bit about the background of Bitcoin. But we're excited to have you back on, Bob, because we're recording before the halving, but when this airs next week, it'll be just after the Bitcoin halving occurred here. Before we jump in, if you don't mind giving the audience just a little bit about your background and some of the things you've been involved with in the Bitcoin world.
Sure. Well, I'll go back to before Bitcoin, where I was
That'd be
the
great.
chief technical officer at Gateway, the personal computer company. So my roots are really in computer design, and I spent a couple decades doing that. I entered into this world of, Bitcoin in 2017, and have been running a series of mining companies. The parent operating company is called Barefoot Mining, and we operate sites all over the country. And we're actually looking at trying to expand outside the U.S. borders right now as well. And we focus on small to medium-sized commercial sites. So within the Bitcoin world, you can mine as an individual in your garage. You can be what I call an elephant, which would be hundreds of megawatts type sizes. That's kind of the mining that gets a lot of fanfare because there are several public companies doing that. But we kind of sit in this niche in the private side, privately held companies mining at small commercial sites.
Yeah, you call those, was it wild horse
Horses.
operations? Yeah.
Horses, right.
Yeah,
Yes.
horses. Yeah, horses. Yeah, and I'll never forget our first conversation. We were sitting at the evening before a mastermind got started. We started talking about Austrian economics, and I couldn't help but think about you yesterday because a video went viral, and it was an MMA fighter, and in his little victory speech, he said, and I'm not going to repeat it exactly because we try to be professional and family friendly on the show, but he said, "Read Ludwig van Mises,
Yes.
MFers," is what he said. And
Yes.
and
Yeah.
I had to laugh because it reminded me of me and you sitting there late at night
Yeah.
chatting about Austrian economics, which maybe isn't the first thing a lot of people would talk about over a drink, but it certainly is what I enjoy.
Yeah. I'm glad you brought that up because I think
Yep.
that's a material event.
Yep.
And I think what's happening is there's an awareness that the school of economic thought that has predominantly been in charge of economies for the last century is failing. It's failing at least a lot of people.
Yeah.
and eyes are being opened. And so, like that's a material event. I mean, in my mind, it
Yeah.
shocked me, obviously, but it's like another event that's happened since we've talked the last is that Argentina has elected a president founded, he's a professor of economics,
Yeah.
and he's an Austrian as well. And so this concept of sound money, of keeping governments out of money, of keeping governments small, all those sort of things, um, I mean, it's wonderful for me, because I come from that school of thought. And it's actually cool for Bitcoin because Bitcoin is founded on these same principles.
Yeah, absolutely. And again, check out episodes 83 and 89 to learn a little bit more about that. Bob and I talk in detail about that. But I think, something that, look, this has been kind of a wild year for Bitcoin. And, it goes up and down from time to time, but we've seen it rapidly rise this year. And, going back, if you look at different patterns, there's been this pattern around halvings.
Yeah.
And if you wouldn't mind, Bob, share with the audience a little bit about what is a Bitcoin halving, and feel free to correct me. I've seen it halvening and as well as having. I just want to make sure I'm getting that technically accurate. But if you don't mind sharing a little bit about what that is and why it's actually significant.
Sure. Both terms are acceptable, by the way, having and having. I tend toward having, but either is fine. So what is the halving? Well, Bitcoin has a fixed money supply. It's 21 million. And the way in which that issuance occurs is controlled through the halvings. So on a technical basis, every time a block gets issued, which is about every 10 minutes, a little bit of Bitcoin gets added into the money supply. It means you could think of
Mhm.
it as all 21 is already created, but we're kind of releasing it into circulation would probably be a way
Ah,
to visualize it. And
yeah,
so as we sit here today, that's 6.25 Bitcoin every 10 minutes that comes in.
right.
Um, that works out, by the way, like currently, that means the money supply is inflating at about 1.6% annually, if you do all that math. So it's a pretty low rate. Now, what happened is because the halving occurs every 210,000 blocks, we started going back to the beginning in 2009, issuing 50 Bitcoin per block. And that 210,000 blocks takes roughly 4 years.
Okay,
So we've had three halvings thus far. That gets us to the 6.25, 50 to 25 to 12 and a half to 6.25.
right,
Now as you said, we're 5 days away roughly from that number being cut to 3.125. That will drop the inflation rate to 0.8%.
right.
So, so the monetary inflation, which we talked about Austrians already. If you talk to Keynesians or MMT guys,
Mhm.
they'll typically define inflation more like price inflation, this basket of goods, CPI,
Right.
producer price index.
Yeah.
Austrians say no, that's all a side effect, that inflation is the expansion of the money supply, period. And
Yeah.
so Bitcoin follows that and just says, hey, we're marching towards 0% inflation, right? And
Right.
we're interestingly in Bitcoin, we're essentially after this halving, you could almost say we're there, right? We're at
Yeah.
0.8%. And so there's not much gas left in the tank there in terms of monetary expansion.
Yeah, very low. So I mean, and to your point, we talked about this before, but for Keynesians, basically, the government controls the money supply, and they can manipulate things up and down, and then the government measures price inflation based on this basket of goods. That there's a number of flaws with that, but one of the things that I don't know if everybody realizes that, but the government controls that basket of goods. and they control the basket of goods that they measure, and then they also control the weighting that they put into that basket of goods. So this 2% metric that the government, at least in the United States, says that they're targeting, isn't necessarily actually 2% when you look at the inflation across
Yeah.
the basket of goods. And a couple of years ago, we were talking, I mean, real inflation was more like 15%. It was almost twice what the
Yeah.
government was saying it. Is that accurate?
Yeah, it is. And I
Yeah.
know, a lot of your folks are, for instance, real estate investors. So,
Yeah.
that asset inflation is part of inflation.
Right.
And I think what you'll find is if you start taking those metrics, how much is the stock market up? How much is the price of fine brandy or whiskey? What is the price of homes? Those things are really reflective of inflation. And I
Absolutely.
think
Yeah.
probably a lot of the folks in your that follow this podcast and follow some of the things you teach. Basically, if I were looking at it as an Austrian, what I would say is what you are doing is you're investing in these assets that are advantaged relative to inflation. And so you're kind of one step ahead of the game, but it's always chasing you, right? It's
Absolutely. Yeah.
that's what you're doing is you're investing to stay one step ahead of that whole process. The other thing, I don't want to go too deep probably because it's not today's theme, but other thing I'll say is if you think about it, what the policy we have, it's always backward looking. So what's happening is like you'll hear Powell when he goes on the media say, well, we're waiting for the data to tell us what to do. Well, so he's waiting for data from the past to tell him about what action he's going to take. So it's purely reactionary.
Yeah.
Part of what Bitcoin does is it says, hey, I can tell you exactly what the issuance is today, but I could actually tell you exactly what the issuance will be. Pick a date, October 1st, the year 2071. I could, in 5 minutes, I could tell you exactly what the money
Right.
supply will look like on that day.
Yeah.
So that's a pretty radical change. And we don't need
Absolutely.
Jerome Powell or somebody driving the bus because we know
Yeah.
where we're going.
Yeah, and you can't even do that with gold. And there's some
Right.
similarities between Bitcoin and gold. But you brought up a good point. When is the last Bitcoin set to be mined approximately?
About 2138 is my estimate.
2138.
Yeah, some
Yeah.
people say 2140, but as I said, it's Bitcoin is actually not time based, it's block based. So when will that block come? But yeah. But
Yeah.
effectively, so when we hit the halving, 93.75% of all the Bitcoin will already be in circulation.
This
So
week. Yeah.
this week, yeah.
Yeah.
So um we will be working toward the last, what would that be? 6.25%
Yeah.
for over a century.
Yeah. That's pretty amazing.
Yeah.
So a couple things. I know there's various metrics of this out there. That 21 million that's set to be, there's a significant percentage of those Bitcoin that are assumed to have been lost forever. Approximately what percentage of that? I've seen like
There's
6 million.
different
Is that?
estimates,
Yeah.
2 to 4 million
Two
of
to
the
four
total.
million. Okay.
Yeah.
Gotcha. It's like 10 to 20%, which again, that's still, that's kind of irrelevant in a lot of ways with respect to how Bitcoin operates out there. Is that accurate?
Well, I think as it gets utilized
Yeah.
more, that does effectively increase the scarcity if it really is lost.
Yeah.
The interesting thing is we can only estimate the loss because we don't really know.
Right.
Um, what we know is there's a whole bunch of Bitcoin, for instance, that hasn't moved for a decade or more. And so a lot of people assume that to be lost.
Right.
But
But we
and
just
there
saw
are some,
some a couple weeks ago that hadn't moved since
yeah.
almost inception. And it just started trading, right?
That's why I say we have to be a little cautious with it.
Yeah.
So I in the back of my head I know that number and I
Yeah.
think about that number, but whenever I'm doing any sort of long-term planning or price analysis or things like that, I'm looking at the 21 and
Yeah.
I assume it's all there.
Yeah.
And by the way, roughly 1 million of those are Satoshi's, who's the creator, and we those haven't moved either. So it seems pretty certain that at a minimum those aren't going to move.
Yeah.
But again, I don't,
Yeah.
it's almost like a cherry on top of this ice cream sundae.
Yeah, I like that. Okay, so a couple topics. One, Bitcoin miners today are rewarded with those blocks of Bitcoin or those Bitcoin when they issue a block. When all the Bitcoin are mined, what how is the system going to perform at that point? For listeners that aren't familiar with it, because
Yeah.
it's like, hey, we're going to mine it, we're going to get rewarded for that. As the reward goes down or it's eliminated, why is there an incentive for the system to work?
But there's a second piece of the miner. It's actually literally called the block reward. And there are two pieces. On a technical basis, this part we've been talking about, which is the
Mhm.
new issuance, is called the subsidy.
Okay.
But there is a second piece, which is a fee. So if I, let's say, want to send you 1 Bitcoin, Chris,
Please do.
I, yeah, um, then I have to add a fee to it. You could think of it as a tip, an incentive, a bribe. You think about it, whatever it is you want. Because what happens is at any point in time, like as we sit here today, I looked at this morning, there's 150,000 Bitcoin transactions waiting to get included in a block. You could think of
Okay.
it as like pending checks or pending credit card transactions.
Okay.
Okay. But we can only fit about 4,000 of them in any given block. So the miners, as they're choosing which transactions to pull from the one, they got to put 4,000 of 160,000. Well, what criteria are they going to use?
Mhm.
Largely, it's not exclusively, who's offering the most money to
Yeah.
be in the next block. And obviously, people with large transactions or urgent transactions put a bigger tip in. So those fees also go to the miners. Now, last year, I do some advanced metrics on this. Last year, the average block was 6.25 of subsidy and 0.43 Bitcoin of the fees.
Okay.
That now when the halving occurs, the 0.43 won't have.
Right.
In fact, my prediction, we probably don't have time to go into the details of it, is
Yeah.
my prediction is that Bitcoin adoption basically is increasing at a radical level.
Hmm.
That a number of transaction requests going into the network is going to skyrocket, and as a result, those fees are going to skyrocket. So 4 years from today, my model shows that when the next halving occurs, the fees and the subsidy will be the same number, roughly 1.5 Bitcoin at that point.
Okay. Yeah, and that and
So,
that that makes sense. And like you said, it's going to skyrocket specifically as a percentage of the
yeah,
fee versus the total subsidy and
right.
fee. Yeah, that
Yeah,
makes a lot of sense. Yeah.
because what we call block space, which is, basically the right to be in a block, it's finite. It's interesting. Satoshi, when he designed Bitcoin, not only is the 21 million finite, but the block space is finite too. So on an annual basis, there are about 53,000 blocks, and each can hold about 4,000 transactions. That number can float a little bit, but
Hmm.
there is a finite size limit. So that means there's a little over 200 million transactions the network can process annually. So as adoption goes up, the competition to be one of the 200 million selected on a given year will go up.
Yeah.
Um, Now, there are other ways. So I guess two conclusions. So one is I have no concerns about what we call the security of the network because
Hmm.
the miners, we need money to keep running this process and mining the
Yep.
blocks. I have no concerns about there being enough money coming in, even if once it's exclusively fee based.
Fees. Yeah.
Um, but number two, if there's 8 billion people in the world, which there's about 330 million companies in the world, but we can only do 200 million, what I call base layer resolutions.
Yeah.
That math doesn't work, right?
Right.
So Bitcoin has something called a lightning layer. It's called the layer two, which
Hmm.
basically you could think about it as you move money out of the base layer into the lightning layer, and then that layer can do way more transactions. And it's almost like if you withdraw a couple $100 from the bank, that couple $100 could be used back and forth between hundreds of people,
Right.
and represent tens of thousands of dollars of economic activity
Yeah.
before it gets returned to the base layer.
Yeah.
Right. So it's the
Perfect. Yeah.
same principle.
Yeah. I love how you described it that way. Yeah. And that kind of brings me to the next part of our discussion here. But, you know, the Bitcoin halving, I think it's an event. It's interesting. I'd like to talk about kind of the price movement around that.
Yeah.
Um, and actually, let's stop and talk about that before we talk about kind of the U.S. dollar and Bitcoin and its adoption around the world. So looking back, Bob, I was looking at kind of the price movement around the halvings. We've seen kind of this regular pattern
Yeah.
where Bitcoin will rise into the halving. After the halving, then it'll kind of like flatten out. It'll take this kind of S curve
Yeah.
up and down. Is there significance to that? What do you see with respect to the pattern and between now and 4 years from now? Do you have a pricing model or anything based around that?
Yeah.
Are you a high-income business owner or professional earning 200,000, 300,000, or even more a year, but still feel like you're living paycheck to paycheck? Are you comfortable working until you're 65 or 70 to retire, or do you want to achieve financial independence and live life on your own terms? You could join myself and Matt Ford and learn how we both became financially independent in our early 30s. We will teach you how to make, keep, and grow your money, teaching you strategies to maximize your earnings, keep your income that you've earned through tax strategy and legal structures, and ultimately teach you how to grow it by determining your personal investing strategy, as well as teach you how to analyze investments so you can grow your passive income to the point to live life on your own terms. Our coaching clients reliably do this in 7 years or less. To learn more, check out our coaching program at nextlevelincome.com/coaching. That's nextlevelincome.com/coaching.
Yeah. If you look at price on a log scale, so if you plot
Yep.
this on a log scale, what you'll find is, like, real quickly, I've been studying this closely, so I have these numbers at the top of my head.
Yeah.
When the first halving occurred, it occurred when Bitcoin was priced at $12.
Okay.
1 year later, it was 1,200. So it 100x'd in 1 year in the first cycle.
Okay.
And then, as you said, it dipped. Now, did it dip because it ran out of gas because of the halving or some external event? I don't know. I mean, you could argue that. Second one occurred. Okay. Now, when the second one occurred, so by the way, what it did is, on a log scale, it went up 2 orders of magnitude, roughly from 10 to 1,000.
Okay.
Right. And it did it in a year. The second halving, it went up 1 order of magnitude at 10x.
Okay.
And it did it in 1 year and 1 quarter. And in the third, it went up not quite 1 order of magnitude, about 0.8 on a log scale, and it did it in a year and a half. So what's happening is, as the halvings are occurring, the price reaction is lessening a little and taking a little longer to extend. Now, that's 3 halvings.
Yeah.
Is that really enough to make a firm conclusion? I don't know.
Yeah.
But there's definitely something there. There's no doubt that by restricting the amount of new issuance, that there's a definitive reaction to the market, right? It's a classic supply thing. And so what we've been having is
that the stock flow model that they refer to as well? Or is that
well,
something different?
it's stock to flow. Now, there's kind of 2 versions of stock to flow. Stock to flow meaning, if you look at any commodity, how much of it is consumed versus or how much of it is coming into the market relative to how much is already there. Now, in some commodities, let's say like silver or gold, sometimes the commodity is also being consumed.
Right.
Or, actually in most commodities that's happening. So there's a new issuance rate, but there's a usage rate. So even like gold in making electronics or things like that, some is kind of coming out. But in Bitcoin, that doesn't happen, right? It's
Right.
it's more pure. Um, so yeah, so that's a material portion of the impact, but it's the only commodity I know of, other than the block space of Bitcoin, which as demand increases, there's no mechanism to increase supply. Like, because every other business is set up, right? If
Yeah, you can upregulate it when the price
Yeah,
goes up. You can
even
adjust that.
gold.
Yeah.
You mentioned gold before.
Yeah.
Sometimes there's a lag factor, right? So if gold is suddenly in high demand and it's up, right? I mean, gold's
Yeah.
doing better. I'm sure you will see mining companies start to figure out how to crank out more gold. But to your point, if you look at the stock to flow model, well, gold's been mined for thousands and thousands of years. So, you know, if they if currently they're mining at the rate that produces like 1.5% increase in the supply annually. If they really crank it up, can they get to 2.25 or something like that? Probably. But that sets that upper threshold.
Yeah.
Versus I don't know, think of housing, let's say, housing, well,
Hmm.
could they crank it up from 2 or 3% expansion to 4 or 5 annually? Maybe they might be able to do that. But Bitcoin, nope, no matter what, even as demand's going up, the supply interest is actually going down.
Right. Yeah. Yeah, fascinating. So what does your model predict when it comes to pricing? Because I've seen a lot of, when you and I saw
Yeah.
each other in it was Miami at the Bitcoin
Yeah.
conference. I look forward to seeing you here hopefully in
Nashville this
this
time.
year in Nashville. But there's a lot of different talk. It's like, oh, people predict Bitcoin to be 500,000. They look at the price of gold. They look at it as a percentage. I've seen a lot about like 1% of portfolios now that the ETFs are prevalent. That's another thing that's come into play since you and I spoke last. What do you take into account when you look at the future price of Bitcoin compared to all these options that are out there?
Well, I'll start with, the analysis we kind of reviewed there, that I think first, if we look at the next, it's harder. It's kind of interesting. It's harder to probably predict 1 to 2 years than it is to predict 4 or 5.
Yeah,
Um,
and I like
yeah.
I look at the long-term view.
Yeah.
That's kind of how we look at
So,
our real estate and
okay.
demographic trends and those sorts of things.
So
Um,
if we look at that, so if we fast forward 4 years, where are we going to be?
right.
I would say it's highly likely that we are approaching one order of magnitude movement. So, based
About
on what I said,
10x.
so about 10x, which would
Hmm.
put us in the $600,000 to $700,000 per Bitcoin range.
Hmm.
And so, yeah, I mean, that probably answers the question right there. Yeah.
Good enough there. So yeah, um, we'll have some resources actually in our weekly newsletter that's coming out here concomitantly with this podcast. So again, since you and I have been speaking here and being on the podcast, we've seen rapid inflation, in this country. And the price of Bitcoin, at least in the United States, is in US dollars. Um, what are your thoughts on, because one of my big concerns, Bob, is what happens to the US dollar? Have we reached the point where it stops becoming the reserve currency? How do you see Bitcoin flowing into the international monetary system? You mentioned earlier that it's not, Bitcoin itself isn't necessarily the most efficient means to complete transactions. We have the Lightning Network and those sorts of things. How do you see Bitcoin fitting in to transactions and currencies around the world?
I think to be competitive ultimately, that people will either have to have a Bitcoin-based economy, or they will have to have a currency, a local currency based on Bitcoin that's reserved. Um, because if they don't, are you familiar with Gresham's Law, which is that
Refresh
Gresham's
my
Law
memory.
is,
I've heard of it, but I couldn't cite it off the top of my
yeah,
head.
Gresham's Law basically says that the hardest money always wins. So it goes back to like in the late 1800s, when there were periods where there were both gold coins and silver coins being issued. And what would happen is people people would hold the gold coins, which were considered more scarce, and they would always spend the silver. And
Yeah.
so there was no basically none of the gold got into circulation, only the the silver got into
Yeah.
circulation. In other words, the gold started accumulating more value too, relative more value because it
Right.
was effectively getting scarcer. Well, I think the same
Right.
thing happens.
Yeah.
And there are many factors, I think, pushing the world away from the US dollar as a global reserve currency.
Mm.
And I think even as Americans, I think one of the things to realize is that the US not being the global reserve currency actually is probably, in my mind, a good thing,
Mm.
not a bad thing. Now, I think there's a lot of patriotism, there's a lot of emotion surrounding it,
Yeah.
but it's actually done a lot of damage. And this might shock some people, but there's another effect in economics. It's called the Triffin dilemma, and this is the Triffin dilemma. The Triffin dilemma says whatever currency is acting as the global reserve currency must be a net exporter of money and importer of goods. And if you think
Repeat
about
that
it,
one more time. Must be a net exporter of money and a net importer of goods.
yes, it must. Because it is to be the global reserve currency, if you want other countries to use your currency,
Yeah. They got to get it.
they got to get it, right? Well, how are
Yeah.
they going to get it? The only way to get it is to sell you something.
Mm.
Well, now if you think that through, you go, well, when you look at, let's say, the erosion of the manufacturing base in the US, doesn't matter what industry, right?
Yeah. Yeah.
Textiles,
Hey,
automotive.
North Carolina here, we've seen it the
Yeah.
past few decades. It's just totally decimated
Yeah.
textile industry. Yeah.
And the politicians will say, oh, it's the evil people in Southeast Asia or the Chinese or the whatever. They undercut our prices or whatever. Well, that's not exactly true. Did they undercut the prices? Yep, they did. Why did they undercut the prices? Fundamentally, it's because we wanted them to use dollars. Well, how do we expect them to get the dollars? They have to sell us something.
Yeah.
And how are they going to sell us something? I mean, we were you could say we're self-sufficient. We could, at one point in time, maybe we
Yep.
were, whether that's energy or food or textiles or whatever. Well, these other countries had to sell us stuff. And let me tell you a short story. So to exemplify this. So imagine a world where um, the 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 world's been under like this pandemic, right?
Yeah.
Okay, and all exports between all countries have been shut down.
I can
Now,
imagine that.
yeah. Now, if if that were the case and the world starts to open up, let's say you're the president of Peru, and during the pandemic, your bridges started to fail and you had all these
Mm.
things in your infrastructure that started to crumble. So you realize, hey, we gotta build this infrastructure for our people. So you don't have the expertise to do this though. So you find a German firm that is an expert in this sort of stuff and you want to hire them. Well, do the Germans want Peruvian pesos? No, they don't. They want, you know, and by the way, the Peruvians don't have any euros or German marks or whatever that is, right? And so they don't have any way to get those. So you settle on the US dollar as a mechanism for that. Well, Peru, so let's say you're going to need $10 billion.
Okay.
Well, the only way for Peru to get $10 billion is to sell something to the US.
Mm.
Okay. So the president of Peru takes his best sales guy and he says, what do? We grow a shitload of, excuse me,
Oh, it's all good.
we grow we grow all these potatoes, um, fly to the US and sell them a bunch of potatoes. So he flies around and he talks to Walmart and he talks to McDonald's or whatever. And they say, well, we already have all the potatoes we want. Why would we buy your potatoes?
They're
And
cheaper. They're better, cheaper, right?
right. And he doesn't have an answer. So he flies back, tells the president, well, They don't want to buy any of our potatoes. They have all the potatoes they need. He goes, well, no, get back on the plane, go back there. You sell them potatoes at whatever price you need because we can't build the bridge. And our people are going to revolt if we don't fix this. So he gets on the plane and basically says to all the buyers, what does it take?
Yeah.
Okay, you gotta undercut all the Idaho and Wisconsin potatoes by 20%, so be it. Right? So they cut the deal,
Yeah.
right? Now what happens? The folks in Idaho and Wisconsin that are growing all these potatoes are in an uproar. Those evil Peruvians have undercut us, and now our potatoes are rotting in the fields, I've taken a few liberties to simplify
Yeah.
the story,
Yeah.
but that's the story of American manufacturing in the last century as we became the global reserve currency,
Yeah.
a massive erosion of it. So it's a long-winded way of saying now, if you have a currency that's not the globe, it's not tied to any one country. Now what happens? You you can now compete on the merits of
Level playing field.
on a level playing field.
Yeah.
And the US has massive resources. We have
Oh yeah.
a great labor force, we have rich farmlands, we have great technology. So we can if we're not fighting our own dollar, we can compete.
I
Um,
that's I love that aspect. Yeah, that's a very optimistic view of seeing that. And I think it's one that again we don't hear very much about because like you said, we see it, from the politicians vilified that. I mean, you see it on both sides, right?
yeah.
You see it on both sides of the aisle when it comes to that sort of thing. Yeah, so it could be it'll be interesting to see how that plays out. A lot of ways as we digitize the currency. So I guess as I look at it, and I'd love to hear your perspective on this. We've heard about, central digital currencies, I'm sorry, central bank
Central
digital
bank.
currencies, CBDCs,
DC.
right?
Mhm.
I always mix those up. And, we hear politicians saying, no, 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 not on my watch. And then we see it being pushed in other political circles. Do you see central bank digital currencies being tied to Bitcoin? Would that be a way to make this happen? Have essentially like a digital dollar tied to Bitcoin?
Um, Ultimately, yes.
Okay.
I think that the major countries, the US and the EU and Japan and places like that are going to fight. I mean, they're going to
Yeah.
because because even though what I just told you is that story I told you is the logical end game, there's a pretty rough transition
Sure.
to get to that point.
Yeah.
And what it means is they lose the money printer. The money
Yeah.
printer doesn't no longer exists. And when the
Which
money
means
printer
the government, specifically the US government and the politicians lose control and lose power, a big chunk of power.
massive,
Yeah.
right?
Yeah.
Yeah, they can't promise things. I mean, they
Yeah.
because then they can only pay for things in which there is an equivalent tax revenue.
Yep. Yeah.
So it forces this honesty. So whether you're giving money to Ukraine or you're funding a social program or building a bridge,
Yeah.
whatever, you
You got
you
to pay
you
for it.
to you have to get the money from the people. And I think when people start really understanding the cost to them of these different things, they will revolt as well.
Yeah. Absolutely.
And
Yeah.
that's an ugly period.
Yeah.
What I think happens geopolitically, though, is there will be places in the world, um, most likely smaller countries, like El Salvador's already there, right? But there's a new presidential candidate in Suriname right now who is a Bitcoiner, and
Hmm.
she's running on a platform of, hey, move the country to that platform.
Yeah.
We'll see where Argentina lands. I think they're struggling a bit, but so I think from the top down level, you'll see some smaller countries. There'll also be a bottom up thing though, where as people get involved with Bitcoin, they disassociate themselves from the dollar-based economy. So that's my personal goal.
Yeah.
I'm not there. I'm not even close to there. But my goal is I do not wish to participate in that monetary system. So um the more I can, like even in our business, we're a Bitcoin based business, right? We're not that far away. Like in my business, from we generate our revenue in Bitcoin. I'm not that far away from being able to, let's say, pay my employees
Yeah.
in Bitcoin. There's a few people working on projects that would allow us to pay for our energy in Bitcoin.
Hmm.
So when those sort of things happen, then I disassociate from that system
Right.
and it loses power.
Yeah, absolutely. And there's some positives. Like we talk, we've had guests on the show talk about the blockchain and being able to transact and transfer property and those sorts of things, and a lot of
Yeah,
efficiencies that can occur. So I think there's a lot of positives that can come from all these things.
sure,
Yeah,
sure.
absolutely. And we look forward to continuing that discussion as well, Bob. So, we're recording this about 4 days before the halving. This is going to come out a few days after the halving. Bitcoin is right around $65,000 today. We shall see where it goes. But Bob, we appreciate your perspective on all these things, and your knowledge and background and thoughts on all the above.
Thank you, Chris. Always nice to talk to you.
Oh, always nice to talk to you as well, Bob. Thank you so much.
Thank you.
Hey, Chris here again. I hope you found this episode valuable. Now, I have one more thing to gift you. We have a page for my coaching clients where you can get a free copy of my book, as well as much more from previous guests on the show. Just check out nextlevelincome.com/coaching to get a free copy of my book, audiobook, and much more. I'll send you a copy of my book and cover all the shipping costs as a thank you for listening to the podcast. Also, please like, share, and take just 90 seconds to give us a rating on Apple Podcasts.